cliff. Some of the most popular retail stocks, like Tesla, are also down 8% and a further 1.7% in after-hours trading. Even my own largest position, Brookfield Corporation, was down 6% at the market close. The reason stocks are selling off so much is because the Fed lowered interest rates by 0.25% and gave the outlook for only 2 quarter-point interest rate cuts in 2025. This is a full half percentage point below what the market was expecting in terms of further interest rate cuts for the next year. Or in other words, the market was expecting and pricing in much larger interest rate cuts in 2025. This news has caused bond yields to spike and stocks to sell off rapidly. What's also interesting is many banks and analysts have been getting increasingly bullish on the S&P for 2025 and increasing their price targets all the way up to 7,000 now. U.S. stocks have also seen record inflows of $448 billion so far this year, which suggests that investors are selling international stocks and moving more and more of their capital into the U.S. markets and indexes. These massive inflows have led to the largest stocks in the U.S., like Apple, trading for extremely high price-to-earnings ratios of 40, despite Apple's business not seeing much growth over the past few years. This has also caused the price-to-earnings ratio of the S&P as a whole to reach 31, which is only 10% away from the price-to-earnings ratio that the S&P was trading for during the tech bubble. This is all to say that the market has become very expensive and priced for perfection. So now that the Fed has announced lower interest rate cuts than the market was expecting, it's caused a bit of a panic and sell-off in stocks. So in today's video, I want to discuss the stock market volatility, what I am doing now, what my expectations are for 2025, and really what my strategy is going to be going forward, and also how investors can detach their emotions from the stock market volatility so that you can start to view the volatility for what it is, which is opportunity. So this is going to be an action-packed video, so let's just hop right into it. All right, so first, I want to discuss what I did in the market today, and I just purchased some more Brookfield Corporation. I simply could not help myself after seeing the stock was down 5% at the time that I purchased it, but I still think that Brookfield Corporation is a high-quality business, and it's the same business that it was yesterday. So now that the stock has sold off 6%, it's simply allowing me to buy shares at a cheaper price and ultimately higher future returns. So this is a stock that I have added to my portfolio during the pretty much crash that happened today. And I wasn't planning on buying more Brookfield today, but again, I saw the stock down 5% and I simply could not help myself. I have also been continuing to buy select stocks in my portfolio over the past month, and I'm not someone who tends to sit on a lot of cash or try to time the market. I am someone who believes that there is always value somewhere in the market, and therefore I like to add where there is value. And if the market does continue to come down for the remainder of the year, and if it does see a real correction in 2025, then I am simply going to continue buying stocks, and hopefully we can see some more value in the markets if that does happen. I've also noticed that a lot of newer investors tend to get worried or fearful when their stocks go down, especially after they just bought them. I actually did a big video for my Patreon members a couple of days ago because one of my Patreon members said that they purchased him stock, and then the stock fell 10% and they weren't sure if they should sell the stock now or continue buying it. And this perspective of not knowing what to do after a stock falls or during a stock falling is a reflection of the investor focusing on the share price and not the business behind the share price. And how you detach your emotions from the daily volatility or stock prices falling is you increase your conviction in the business and you focus on the business behind the share price. So I'm going to show you guys the example that I used in my recent Patreon video with GoEasy, because this is a stock that I have continued to add to my portfolio, and I've been continuing to research it and build my conviction on this position as the stock has come down. And if we take a look at GoEasy's year-to-date performance now, it's up only 2% on the year. This is at the same time as the S&P is up over 20%. So far year-to-date, GoEasy has significantly underperformed the S&P 500. The highest the stock traded for was $205 per share on July 3rd as well. This means that the stock is now in an over 20% correction from its all-time highs. And if I were a newer investor, or if I were someone who based my investing on what the share prices of stocks was doing, then I would look at this 23% correction that GoEasy stock is in and become fearful or become emotional that this position is underperforming the overall S&P It's down 23% at the same time as the S&P has been continuing to rally. And this could cause me to become fearful, worried, or downright pissed off at this position and not know what to do. But this is not the way that I invest. How I invest is I don't look to the share price performance in the short term. What I do is I look to the business behind the share price to see if it is creating an opportunity and if the fundamentals of the business are actually continuing to grow. So if we head over to GoEasy's financials really quickly, we can see that its revenue is continuing to grow and hit all-time highs. The revenue growth for this business has been incredibly consistent, and in the most recent quarter, nothing has changed. The revenue is continuing to go up. If we take a look at GoEasy's operating income, this is the exact same story, and it's hitting fresh record highs of $581 million as of the most recent quarter now. Now, lastly, if we take a look at GoEasy's net income, we can see that it is clearly continuing to go up, and in the most recent quarter, it hit another record high of $284 million in the trailing 12 months now. So now let's take a look at some of GoEasy's KPIs. And here we can see that its total gross consumer loans receivable, or essentially its loan portfolio, is sitting at a record high of $4.4 billion and continuing to grow strong. This ultimately means that GoEasy is continuing to grow its business, and it is still seeing strong demand for loans from its customers. Next, let's take a look at GoEasy's gross loan originations on a quarterly basis. And here we can see that in the third quarter of 2024, the company had a record high for loan originations of about $840 million. So GoEasy is currently seeing a record demand for loans, and the business's loan portfolio is continuing to grow. In addition, with its revenue hitting an all-time high, operating income hitting an all-time high, and net income hitting an all-time high. So literally the fundamentals of this business are at an all-time high, and they are continuing to grow. Now, additionally, at the beginning of 2024, GoEasy put out their revenue, their loan portfolio, and their operating margin. And then in the second quarter of 2024, they upped that guidance for 2024, 2025, and 2026. And then in the third quarter, the most recent quarter, they maintained their increased guidance for 2024 and their 3-year guidance out to 2026. So this business is continuing to see strong demand, and its margins and profits are continuing to remain stable, and their outlook is remaining stable as well. And what all of this research that I have done into GoEasy's business has resulted in is my conviction growing at the same time as the stock has come down, which ultimately creates an opportunity for me. This business is now trading for a price-to-earnings ratio of only 9.63. And analysts are also expecting it to generate around $20 in EPS for 2025, which means that it is now trading for a forward price-to-earnings ratio of about 8, while the business is still projecting around 15% annual growth. Now, that was kind of like a quick summary on all of the recent research that I have done on GoEasy. It really goes a lot more in depth. I've done a lot of videos for my Patreon, and I've also discussed the stock a lot with my Patreon. So I'm not going to rehash all of the recent bear thesis that people are coming out with and me looking into the bear thesis and whatnot. But the moral here is that for you to view falling stock prices as an opportunity, you have to remain focused in the business behind the share price. If you're looking to the share price to make your investment decisions, then you're going to just be acting in a constant state of response. You're going to be responding to what the share price is doing. Now, what I have also been suggesting to my YouTube channel is that I think that this is a time where investors should be trying to increase their conviction in the stocks that they own, because there is a very real possibility that we could see another real correction in 2025, just like we saw in 2022. And it helps to have your convictions solidified before these corrections come, because then you're not needing to redo all of your research or confirm your conviction in the positions that you own and in your portfolio, and your conviction will already be strong, which allows you to quickly capitalize on opportunities when they do come, because you want to be prepared before the stock market corrections actually come. And that's pretty much the entire moral of this video, and that's kind of what I wanted to put out, is I think that we are in a market where people just need to increase their convictions and get prepared for some potential stock market weakness, because the market is pretty high right now. And, historically, when the market has been this high, we do see corrections or we see a period of low stock returns. And it's in those types of markets that people's convictions will be tested. So I like to make sure that my convictions are solidified before they are tested. So to wrap up this quick video, I want to read you guys a couple of pages from my book, The Fundamentals of Investing, and specifically the first few pages of the chapter, The Investor's Perspective on Volatility, because I think that this chapter can really help you detach your emotions from stock price movements and ultimately get you perceiving falling stock prices as a good thing and as opportunity. So let